I think it's 1 minute past 11, so let's begin. Lovely. So I'm going to just tell you next slide.
Yeah.
Thank you very much. Okay, hello and welcome everyone. It's brilliant to see so many of you attending this webinar. I think we had something upwards of 300 people, so that's really exciting. My name is Jess Achilleos and I'm an account manager at Geodesys. I'm joined today, as you can see, by the fantastic and ever knowledgeable Ian Quayle from
Hello. Hi, Jess. Hi, Jess.
IQ Legal Training, who will be giving you a residential leasehold update, which I know is going to be pretty invaluable with all the changes coming up in May. Please do feel free to ask any questions during the webinar. You can do it via the chat or you can raise your virtual hand at any time. And then just at the end, before you leave, there will be a couple of questions. It's a poll that pops up at the end. That would be really grateful if you could fill that in quickly. And then afterwards, you'll receive the slide deck, the presentation and the video via email. So before I hand over to you, Ian, I'm just going to go through a bit of an overview of Geodesys and how we make searches a little bit more seamless and stress-free for you. So hopefully you can all see my slides as well. So for those of you who are not familiar with Geodesys, we are part of the Anglian Water Group and we are a conveyancing search provider. We also create both the residential and commercial Con29DW, so drainage and water reports for the Anglian Water region. We do that in-house. And since May last year, we have been the delivery partner for the Con29DWs for Southern Water. So we have been quite busy, I'd say. We did recently send out our customer survey and we had a really brilliant response, and our lovely customers overwhelmingly said that they were very happy with the service that they received from Geodesys, and actually 100% of them would recommend us to their colleagues. So it was really positive. They did highlight that they really value the direct access that they get to the experts and that they receive outstanding customer support, both from their account managers and from customer services. And something they really appreciate is our ability to produce and send the Con29DW reports really quickly, which of course then minimises any delays for them and their clients. So for example, in January, our average turnaround time for the drainage and water was just 1 day. So of course they're getting them really quickly by ordering them directly through us and almost kind of cutting out any middleman that would slow things down. Next slide, please, Ian. So as I said, we are a conveyancing search provider, so we're a one-stop shop for all of your searches. You can order your Con29DWs, all your environmental reports, local authority, chancel and compliance reports all in one place. So we just try and make it a little bit easier for you. Next slide, please. And from a transparent pricing point of view, we absolutely only charge for searches. You do not pay any additional costs or fees for uploading a plan, which you're always welcome to do, using our mapping system. And we also have a free concierge service where we order searches on your behalf. So always take advantage of all of these services. It's all free. For complete transparency as well, we have a quoting system, so you can pop that over to your client, you can save it and retrieve it later on as and when you have your client's approval, so it's always there. And we do offer a variety of discount packages which kind of combines various different searches together, and then the discount is applied on any of the searches that you are comfortable with using, really. Next slide, please. As you can see, this is just an example of what that search pack would look like with the discounts. Good news is we're not affiliated with any specific provider. So for example, the big ones, Landmark and Groundshaw, we have really good relationships with both. And because we're not affiliated with them, we can give you a completely unbiased recommendation of what kind of the most appropriate and the best searches would be for you and your client within that transaction. If you ever wanted to do a deeper dive into these searches, we can absolutely do a CPD or personalised training just so you get a bit more information of what they all offer. Next slide, please. Thank you. So just it was only very quick from me to summarise. Geodesys are the producers and deliverers of the Con 29 DW within the Anglian Water and Southern Water regions. We can provide all of your searches in one place. You do not pay anything towards the mapping system or uploading a plan, and you get concierge service for free. You will definitely experience exceptional customer service and have a dedicated account manager, and our pricing is always transparent. Next slide, please. And this is just a taste of what we've got coming up. We've got loads throughout the year, so please do keep an eye on emails or on our website. We've got lots happening with you as well, Ian, and a couple of face-to-face events, which we absolutely love doing. So hope to see you all there. And yeah, thank you very much for your time. Enjoy presentation by Ian, and we look forward to working with you in the future.
Thanks very much, Jess. That's very kind of you, and thank you for the introduction. Do talk to Jess and her colleagues, Kay and the team, about your requirements with regard to searches. I've been fortunate enough to work with both for a number of years now, and there's a number of things. One, sort of part of the team rather than a service provider, which I think is important. Very knowledgeable about the searches that can be produced, and very helpful. So if you get the opportunity to speak to Jess or the opportunity to speak to Kay or any of their colleagues, do have a chat with them and come along to the face-to-face events as well. I have to start today with an apology. I have a really bad throat. I've had it for over a week now. Someone said I've been drinking out of wet glasses again, which probably I have. But I sound a lot worse than in fact I feel. I am fit and healthy. The only problem is I don't have much of a voice. So I will croak through this as best I can. It'll last approximately 50 minutes or so. If anyone has any questions or queries, put them in the chat facility. That's probably the easiest way of dealing with it. If not, put your hand up and we can open up your microphone for any questions. If time does not permit you to have a question dealt with, or you're thinking about something I've said after the event, then feel free to drop me a note by email and I'll endeavour to answer the question. Jess, if I may, if I do get questions like that, I'll share them with you and you could then distribute them to other attendees. I will, of course, anonymise the question and any response, so there won't be any issues with regard to client confidentiality or data protection. So the purpose of me croaking along today is to share with you a number of things. One, I want to show you what is causing problems with regard to leasehold conveyancing from the perspective of case law. So we're going to have a look at some recent cases, and we're going to have a look at how that impacts on the work that you do. I've also sort of trawled the new or the latest edition of the Law Society Conveyancing Handbook insofar as it deals with service charge issues in connection with residential leases. So we'll have a look at that. We'll have a look at the Renters' Rights Act and what that does, and I think there's some important things for practitioners to be aware of generally. We'll have a scamper through the Leasehold Reform Act, Leasehold and Freehold Reform Act, see what that does. I want to share with you what we can now extract from the government's draft bill with regard to common hold and share with you where I think we're going with regard to that. And we can also have a little chat about the Building Safety Act as well, if time permits. There are lots of slides, there are lots of notes. I'll be dipping in and out and focusing in on certain slides, which I think are really important, and skipping over others that I don't think are important, but all will be made available to you after the presentation. So, developments in the service charge to start with. Service charge worries me, and it worries me for two reasons. One, we can't deal with service charge accounts. We're not paid enough to have a deep dive into the accounts and into clients' duties and obligations relating to accounts. I think all we can do is transmit to our clients the information that's provided courtesy of the lease, and to give, in general terms, the client a flavour of the sorts of statutory protection that's available to them, courtesy of numerous bits of legislation. So this first part of my presentation concentrates on those issues. A service charge should specify the services that the landlord is obliged to provide. It should enable the landlord to reimburse the cost that it incurs. Note, we're talking about reimbursement. We're not talking about service charge being a profit centre. If a landlord wants to charge management fees, etc., the lease would have to permit it. And the general principle with regard to service charge is that we're recovering cost, we're not generating profit. As far as the provision of services, in an ideal world, I'd like as much information as is possible with regard to the services that have to be provided and the level of service that the lease expects. And I'd like to see duality within the lease, enabling the landlord to recover all the expenses the landlord reasonably incurs with regard to the provision of services. I referred to Section 18 of the 85 Act as to what service charge is, just to reiterate the point. A variable service charge is really what we're talking about, and it's important to appreciate and understand that when we're talking about the statutory protection that's available for leaseholders, it's only available insofar as it relates to, only insofar as it relates to residential long leases that contain a variable service charge. So if you were ever unfortunate enough to encounter a fixed service charge, then the statutory protection that I'll be showing you in a moment or two wouldn't apply. With regard to service charge, we're looking for a service charge regime that's easily understandable, with service charge being paid up front on a regular basis, with service charge accounts being produced, estimated accounts at the beginning of the year, final accounts at the end of the year, and hopefully not a great deal of fluctuation between the two. We need to see ADR provision in the event of dispute for dispute resolution purposes. Ideally, I'd like to see a reserve or sinking fund so that unusual items of outlay can be met by the fund instead of being thrust upon the current leaseholder in the current service charge year. I also like to see the lease enable the landlord to borrow money for unusual items of outlay. So that's the basics. Let's look at what the Law Society guidance has to say in the latest edition of the Residential Conveyancing Handbook. It specifies that service charge accounts must be examined and the buyer advised of their potential liability. So my first question to everyone attending today is, do you give advice on the service charge accounts and the liability that they potentially generate? My guess is, excuse me, and my experience is, conveyancers don't do that. They'll give the clients a copy of the accounts and say that we're not going to give advice, accountancy advice. We recommend that you get specialist accountancy advice if you're risk averse. I think what you are obliged to do is to scrutinise the accounts to check that what the landlord is claiming for, the lease permits. And I think we need to scope our retainer so the client understands the limitations with regard to our role. We're not giving general advice concerning the service charge accounts, not identifying black holes or identifying discrepancies or defects. The next point is that if there is an escalator provision with regard to service charge permitting increase, then exactly the same traps can arise as we encountered with regard to ground rent review. So again, caution should be exercised. Arnold and Britain, you'll be aware of, that's the case where the Supreme Court looked at how, in a modern day context, we interpret commercial property and residential property documentation. But at the heart of that case was an escalator clause relating to service charge. And if you'd looked at that clause and worked it through the term of the lease, then at one point, the service charge liability would be over £1 million by the end of the term. An obligation to pay service charge can only arise in law if there's express provision in the lease. There is a case called Shire against Colvia Management, which is a commercial property case where the court said, in equity, if a landlord is incurring an expense, the landlord can recover the expense from leaseholders. If leaseholders or where leaseholders derive some benefit from the expense incurred. That's my attempted get out of jail clause with regard to case rather with regard to leases, where the lease is so badly drafted that the landlord is obliged to incur an expense but can't recover the expense via the lease. Service charge has to be apportioned between tenants, and there's been some recent cases where there's been disputes about that. One of which was where a leaseholder argued that the service charge should be apportioned so that he was only paying his share of the service charge for the building in which his flat was situated. The landlord said, no, the lease says you pay a proportion of the service charge relating to all costs I incur, excuse me, relating to the management of a development, being a number of buildings, a number of sort of public areas and common parts, etc. And again, in that case, the court said, well, what does the lease say? So again, if the lease does define the service charge cost as being a cost in connection with the development of the site rather than the building, then so be it. Be careful. The other point with regard to apportionment that worries me is if the lease specifies a method of apportionment and we're acting on behalf of a buyer, do we in fact check that the method of apportionment prescribed in the lease is the method of apportionment that is in fact adopted by the court, sorry, by the landlord, because the court will always give effect to what the lease provides for. Where the lease is silent, or when the lease says apportionment is undertaken by the landlord, and the term used that a reasonable apportionment is required, then, as we'll see in a moment or two, when the court is looking at what is reasonable, the court is saying, what would a reasonable landlord do? And will give you a spectrum of the sorts of circumstances where the court will determine that's reasonable. And as long as the landlord has behaved and made his decision within that spectrum, that's enough. A lease may enable the landlord to require payment of a charge in advance of expenditure. Where service charge is payable in arrears, we've got to understand the practicalities of problems arising with regard to the landlord's ability to pay service charge costs. Again, premises are let mainly as a dwelling for less than 7 years, then we need to understand there is some protection under the 85 Act with regard to leaseholders being required to undertake repairing obligations. And interim service charge levies are desirable according to the Law Society. And again, it would make sense from a cash flow perspective that a landlord is enabled to generate interim service charge costs and to recover them. There are a number of cases where the courts have implied terms into residential long leases. For example, where the lease requires a balancing charge to be paid at the end of the year, but doesn't express when that balancing charge has to be paid, the courts have said as a reasonable time is implied. Where a landlord undertakes airspace development or divides or builds additional flats within a building, there's an implied term that the landlord will change the method of apportionment to take into account the new flats or the reduction in number of flats. So the courts and tribunals are prepared to imply terms into residential long leases concerning service charge and service charge apportionment. Let's park the Law Society guidance for a moment and let's have a look at the statutory protection for residential long leaseholders. And the first point to note here is when we're scoping the retainer or submitting a report on title in connection with the leasehold transaction, I am not advocating that we have to go through each and every statute and explain to the client in depth the protection that's afforded to the leaseholder courtesy of that statute. What I am saying is the client buyer needs to understand and appreciate that there is some statutory protection that could be invoked to protect the client at some point in the future. To do that, there's two choices. One, we give a brief overview of that protection, probably in the retainer or in a report with regard to the lease. Remember, we are obliged to explain to a leasehold client the bigger picture in connection with leasehold ownership. Or, alternatively, we could take the lazy option, some would maintain, including myself, the sensible option of indicating to the client that there is statute out there that will protect the leaseholder with regard to service charge and indeed other issues with regard to the landlord and tenant relationship. and refer them to the Leasehold Advisory Service guidance, Do You Know Your Lease? So that the client is aware, courtesy of a third-party resource, as to some of the points I'm going to take you through quickly. So there is protection. The 85 Act, Common Home Leasehold Reform Act, 2002. And yes, ladies and gentlemen, you've guessed it. How could Ian Quayle do a presentation without talking about the Building Safety Act? Landlords are only entitled to recover costs if the costs and the works that have been done are to a reasonable standard. Giving you the first bullet point there that confirms the point. And there is an obligation to consult where landlords are incurring a cost per leaseholder of an individual service charge amount for an item that exceeds £250 in any service charge year. Where there is an ongoing liability, that cost reduces, or that cap reduces to £100 a year. And if a landlord fails to consult when he ought to consult, then the service charge that can be recovered is capped. Section 22 and 21 of the 85 Act enables the leaseholder to request a statement of account for costs incurred, an accountant's certificate, and to inspect the landlord's accounts and the records, the source records that have been used for the production of those accounts. Section 23 imposes a duty on the landlord to pass on requests for a summary of relevant costs to a superior landlord. And Section 21A gives leaseholders the rights in certain circumstances to withhold service charge. Unfortunately, that part of the Act isn't still in force. There are bits of the 85 Act, this is crazy, isn't it, 40 years later, that are still not in fact in force. And Section 42 and 42B of the 87 Act do require a landlord to keep service charge costs in a separate bank account. But the actual 87 Act prescribed that there had to be a separate account for each building or development. That has never been properly enacted. So a landlord fulfills his obligations under the 87 Act if he simply has a separate bank account in which he keeps service charge funds. Demands for service charge have to be accompanied by notification of leaseholders' statutory rights. And Section 47 of the 87 Act compels the landlord to provide a written demand containing the name and address of the landlord. And if the landlord fails to do that, then the service charge demand is of no consequence. So again, there is some statutory protection sitting there and some formalities that are required that if aren't complied with, service charge can't be recovered. Not relevant to service charge cost per se, but a more general consequence that's worth sharing with you is Section 20C of the 85 Act as amended by the 2002 Act that enables a leaseholder to seek an order of the tribunal that a landlord can't transmit irrecoverable legal costs incurred within tribunal proceedings into service charge. If not, a landlord could go to tribunal or defend tribunal proceedings, win or lose, get no orders to costs, but then transmit all his legals into service charge. Landlord can't do that. There's been a recent case, Birch against Meredith, 2026, where that issue was explored by the tribunal. Sweeping up clauses are dangerous. If a landlord is relying on them, the general stance that I take is that you can't rely on a sweeping up clause. And what is best practice is a lease contains provision that lists the sorts of expenses that a landlord is entitled to recover, but then contains provision at the end that there may be other expenses or legal costs of a similar nature that the parties agree the landlord can recover, even though they're not physically or actually listed within the lease. But a service charge clause that says any cost that the landlord reasonably incurs in connection with reasonable management of the building, the block, or the development would, generally speaking, be enforceable. The courts don't like it, and the first tier tribunal definitely doesn't like them. So we've got this sort of balancing exercise. Reasonable management may mean that a landlord will incur expenses that generate benefit for leaseholders that aren't prescribed within the lease. So we shouldn't be drafting leases that means the landlord won't do that. But at the same time, we don't want a situation where the landlord can just run riot with regard to additional works, additional costs, and then transmit them to service charge. So we need to be cautious, and landlords do need to be aware that management fees and legal costs, first tier tribunal and upper tribunal, will always have a good close look at. Does the lease actually allow those costs to be recovered? Is the test. So what are problem areas? What are courts and tribunals currently looking at? The extent of the building development to which service charge relates is an issue. For service charge apportionment and also recovery of cost, obviously. The method of apportioning service charge is an issue, and where a landlord has a discretion, the courts are reluctant to interfere in that discretion, and it's dangerous to look at previous cases to derive some form of precedent. You can't do that. The lease should enable the landlord to borrow money to meet unusual items of outlay and to be able to transmit the cost of borrowing into service charge. And the lease should enable the landlord to create a reserve or sinking fund. This last point is probably my most important point so far this morning. Clients need to understand that service charge liability is an ongoing contractual liability to pay unascertained and unascertainable future expense. We cannot say to a client that some comfort can be taken from the seller producing previous service charge accounts or projected or estimated service charge accounts being produced in connection with a new build scheme. No one knows what the service charge will be going forward. Cost of contractors, electrical supplies, etc., can mean that, service charge costs can rocket. The dreaded Building Safety Act and fire safety defects, cladding and all that goes with it, could mean that huge costs are being transmitted to service charge despite the protections afforded by the Building Safety Act. So clients need to understand that last point. I think it's so important. Okay, so let's leave that for a second or two. By the way, if anyone has any questions or queries, please put them in the chat facility. I now want to talk about the Renters' Rights Act 2025 and what this does. And what this does is a number of things. Firstly, it changes the regime with regard to student letting. So if you're acting for a client that has student lets, or you're acting for a client who's buying a property with the intention of converting into student lets, I would say be extremely cautious and make sure your client understands the change in regime that we are encountering and the radical changes to student letting as of the 1st of May 2026. The second thing is with regard to buy-to-let investment properties, buy-to-let buyers and sellers. Again, the same principle applies. The regime in connection with short-term letting is altering and altering quite dramatically. Clients need to understand that. When did the Renters' Rights Act become law? 27th of October. When the law comes into effect, well, there are three phases. Short term, 1st of May 2026. Medium term, 2030. Long term, 2035, 36. The long-term aim of government is to align private letting with social housing. That's why the 2035, 36 long stop date applies. I think the government was frightened about landlords biting, complaining, litigating about changes in the law that impact on their investments. And so they're giving a long lead-in time for landlords with regard to that reform. There are some reforms that this government is anxious to get into law as soon as possible. And the reason for that is, of course, the government's plan to reform the law relating to leases. So the Renters' Rights Act, in fact, is a sort of next staging post with regard to that reform. But the idea is that the Act abolishes fixed-term assured tenancies and assured short-hold tenancies. A byproduct of that is that the nightmare scenario with regard to ground rent increases and the potential for the creation of an assured short-hold tenancy as a consequence disappears as of the 1st of May 2026. So let's just have a look. What I've done on this slide is giving you a time frame as to what's happening. I'm not going to go through it this morning. Time does not permit it, but it just gives you certain indicators particularly if you're acting for landlords who own student lets or clients who own buy-to-let properties or who are buying such properties, dates that they need to be aware of with regard to the provision of information to tenants with regard to changes in their tenancy and changes in the law. So, core tenancy reforms, phase 1 of the Act, the abolition of Section 21, no-fault evictions. All the other Section 8 methods of eviction stand, but the no-fault no-fault evictions is extinct. Advance rent payments are limited, so a landlord can only ask for 1 month's rent in advance. And as far as rent increases are concerned, there is now a constraint with regard to increasing rent, only 1 increase per annum, and a tenant being able to challenge the proposed rent that's over and above a market rent by first-tier tribunal application. Late 2026, we're going to see a private rent sector database, a national landlord database, the creation of an ombudsman for the private rental sector market. So again, that's got landlords, professional and otherwise, concerned about admin, compliance issues, etc. But that's going to be towards the end of this year. And phase 3, as I've mentioned, push back beyond 2030, probably 2035 or 2037. We'll have a quick look at that in a moment or two. So, Section 1 Renters' Rights Act creates an assured tenancy that's a periodic tenancy with a rent period not exceeding a month. As far as assured short-hold tenancies are concerned, they're abolished, courtesy of Section 2 of the Renters' Rights Act 2025. So the impact on conveyancers is this. If you're acting for sellers or buyers of buy-to-let property, make sure that you're up to speed with what this legislation does. Okay. Excuse me. 2, watch lenders' lending criteria. They're going to change. Okay. For buy-to-let investment generally, and for student letting in particular, you're going to see lenders being more concerned about the amount of loan and the terms of loan for 2 reasons. 1, the ending of Section 21 means landlords are not going to be able to gain possession quickly. They're going to be more exposed to arrears and enforcement issues. And periodic assured tenancies without a fixed term and with rent control measures are going to impact on cash flow. Okay. It's important that you appreciate that the security documentation from lenders is going to change, and you might be very familiar with their standard terms with regard to buy-to-let or student-let properties. That's going to change if it hasn't changed already. Abolition of Section 21 takes effect as of the 1st of May, and an assured short-hold tenancy is replaced with a rolling assured tenancy. And again, as far as that's concerned, the side effect of that is, as I say, the AST trap is in essence abolished. Assured periodic tenancies are now subject to the notice periods which I prescribe. As far as the grounds for possession of Section 8, important to understand that the grounds for possession are subject to human rights considerations, the right to a home as far as the tenant is concerned. And if a discretionary ground is being relied upon under Section 8, then the court has a discretion as to whether to allow possession and has to, when exercising that discretion, consider what is reasonable in all the circumstances. As far as student letting is concerned, the important thing to understand is that we're outside the periodic tenancy regime, and the student letting market is divided into 2 distinct groups. Purpose-built student accommodation. If we have purpose-built student accommodation and tenants within them, then as of the 1st of May 2026, they are common law tenancies, allowing the grant of a fixed term and recovery of possession outside the confines of the Act that we've just looked at so far. Accommodation is purpose-built student accommodation if it's let or managed by a member of a government-approved student housing management coded practice. Andrea, yes, it will be, and it is being audio recorded and video recorded. So again, it's important to understand that. So currently, purpose-built student accommodation is going to be managed by landlords that are registered as landlords in this context. As far as private landlords are concerned, their registration regime comes into force later in the year. PBSA tenancies in place on the 1st of May have the potential to be subject to the new Act, allowing a landlord to terminate the tenancy, as we're going to see on the new possession ground 4A, which is primarily available to non-purpose-built student accommodation letting. So let's have a look at this. Okay, possession ground 4A enables a landlord to terminate student APTs of housing multiple occupation between the 1st of June and 30th September, inclusive in each year. The idea behind this is that landlords can re-let to students from the new academic year. There are conditions attached, but from a landlord's perspective, we may be able to increase our revenue, increase our rental income as a consequence of granting new tenancies in this manner. In relation to existing tenancies, transitional provisions apply up to the end of May, the 6th of May, and you do need to give warning notices to tenants within a month of this part of the Act coming into force. So between the 1st and 31st of May 2026. So student lets, non-purpose-built student accommodation. If you're acting for a landlord, he or she needs to be primed and advised about the need to give notice as to the change in tenancy. There's an impact on rent review. Quite simply, you can only have one review each year. A landlord has to give notice, and the rent can't be an amount in excess of the amount stated in that notice. And the first tier tribunal has jurisdiction to deal with disputes concerning rent review. As far as advance rental payments are concerned, as I mentioned, landlords can only ask for a month's rent up front. And again, important to understand and appreciate that the law prescribes, second bullet point on this slide, APTs entered into after the 1st of May 2026. The tenant can't be required to pay rent before the start of the rent period to which it relates. So you can't have this sort of front loading of rent with regard to tenancies. There's a prohibition on rent bidding. This idea about saying to tenants what you're prepared to pay and the highest bidder gets the tenancy. And prohibition on discriminatory grounds. The client tenant on benefit or with children or with pets. So there are constraints there. Again, with regard to pets in particular, there is still some protection for landlords with regard to noisy barking dogs, etc. I mentioned AWAB's law, which is the Social Housing Regulation Act 2023. And this was introduced to social housing, and the idea that the 2025 Act is that this should apply to private rented accommodation too. Again, not in force yet, in force at some point in the future. And the Decent Home Standard, again, proposed to be enforceable in the private sector from either 2035 or 2037. So, interesting stuff. Time doesn't allow me to spend time talking about the Leasehold and Freehold Reform Act. In the notes in the slides, I've explained what we've got. Generally, an opportunity for leaseholders to extend their lease at a significantly less cost than historically. Qualification of 2-year period before a leaseholder can extend the lease goes, and the length of extended lease going from 50 years for houses and 90 years for flats to a 990-year term for both. So some good news. Again, increasing the availability of enfranchisement, as mentioned in the penultimate bullet point, and a new code of practice applicable with regard to leaseholders. On the issue of leaseholders, again, I reiterate the Leasehold Advisory Service website is a fantastic resource for you all. What about leaseholders who want to extend the lease? Well, unfortunately, there isn't a magic fix. I can't say to you the act means that your client is going to be in a better position or worse position. Generally, likely to be in a better position. But at the moment, you are seeing those advising leaseholders sort of stalling or considering, do we go and extend the lease now? Excuse me. Do we wait until the act is fully enforced? I can't help you on that one, unfortunately. Common hold, the good news or the bad news? What would you like? The good news is that we've now got some meat on the bones of what's being proposed with regard to common hold. And a lot of the problems with regard to the old Act appear to have been considered by government and appear to have been attended to an extent. Also, it's unlikely that we're going to see common hold, meaning that all residential leasehold is terminated and everything has to be converted into common hold. Common hold will be introduced to start with on new builds. If that works, then what we will see, I envisage, is common hold being permitted as an alternative to enfranchisement in circumstances where you've got landlord insolvency, in circumstances where you've got an appetite for leaseholders to convert. But we're not going to see that to start with. What I've done on the slides and notes is to start with, told you about what the draft bill looks like. And then after that, there's lots of information about what a common hold will be. What I intend to do for the next 10 minutes or so is look at what the bill does and share with you where I think the bill has addressed some of the issues that appertained to the old legislation. So, the common hold bill does a number of things. First of all, Part 2 of the Act looks at the old 2002 Act, which promoted a ban on the grant or assignment of residential long leases and the regulation of permitted leases. And it enables a common hold scheme to be created, meaning that residential long leases disappear, but it allows the creation of residential long leases within the common hold. So the way this would work, you would buy a freehold common hold unit, and under the 26 draft bill, you could grant a residential long lease of your flat or apartment, or you could even draft or allow a shared ownership lease of your freehold apartment within a common hold. So that's some good news. During discussions relating to the bill, there was some debate as to whether or not leases could be granted out of a common hold freehold unit. That position has been clarified. Part 3 of the Act extends the regulation of ground rent that applies to pre-2022 leases to modern leases and, to old leases. So you've now got a situation where instead of a dual regime, old leases, you can have a monetary ground rent. Post June 2022, you can't. Monetary ground rents are banned, courtesy of Part 3 of the bill. Part 4 of the bill abolishes forfeiture, the draconian forfeiture that we can encounter, and introduces the concept of lease enforcement claims. And Part 5 of the bill deals with long-awaited controls with regard to estate rent charges. I'm probably asked about estate rent charges twice a week. The most common thing I'm asked about is Building Safety Act issues still, but then estate rent charges. The idea is that Part 5 of the bill gives a rent charge payer and a estate rent charge payer exactly the same rights, or probably more rights, than a leaseholder paying service charge. And Part 1 of the Act introduces common hold, or reintroduces it more accurately. So, what have we got with regard to the Act? 1, flexibility for the developer, the creator of the site, the Persimmon Homes, the major house builder. They can create a common hold, a freehold development, selling common hold units, flats, and apartments, with a common hold association running the development, but with the builder, the developer, the creator of the common hold, retaining developer rights. And as far as those developer rights are concerned, retaining rights to sell off parts of the site to parties for future development. The Act has dealt with a problem that existed under the 2002 Act, which was only one unit holder, where the unit was owned by co-owners, could be a member of the Common Hold Association. The new bill enables all co-owners to become unit holders and to be members of the Common Hold Association, but they only have one vote per unit. Third point on slide. The new bill places great emphasis on the idea of a reserve or sinking fund and says there should be a general reserve or sinking fund for unusual items of outlay that the landlord can't even begin to think could occur, but also a specific fund for, say, lift replacement, roof repairs, or something that the landlord knows is going to be encountered with regard to proper estate management, but can't actually determine what that cost could be. And the new legislation enables a common hold to generate a phased development and mixed use or commercial schemes within a residential common hold scheme. The new legislation enables the creation of a partial transfer company. So Persimmon Homes could create Wolverhampton Common Hold Developments Limited that can take over the parts of a common hold development in Wolverhampton that Persimmon Homes doesn't want to develop out immediately. It allows a common hold to be determined, brought to an end, without the unanimous approval of unit holders. Third bullet point on the slide, really important. When common hold first went live back in 2002, one of the problems with the Act was that there was a doomsday scenario. Common hold can't pay its debts. Creditors issue proceedings, obtain judgment. Creditors then dissolve the company. In those circumstances, without a common hold association, the common hold, the freehold ownership of the site just melted away. Nightmare for unit holders, the owners of flats and apartments. Nightmare for their lenders because their security disappears. The new legislation allows a court to make a succession order requiring that the common hold freehold of the site is transferred into a Phoenix common hold company. So the common hold, the freehold title, cannot and will not disappear. The other point with regard to the bill is it allows the granting of residential long leases, including shared ownership leases and home finance plan leases. So that position, that potential problem is now clarified. We can buy freehold units in our common hold. We can then grant residential long leases. The Act and the bill creates mechanisms to allow the leaseholder to be involved in the management of the common hold unit. But as I say, the principle of being able to grant a long lease of a common hold unit that you've purchased or your client has purchased is sort of set in stone now. So, as we've seen, common hold is going to be introduced with regard to new schemes. $1 million question, when? My guess is late 2027 at the earliest, more realistically 2028. Certainly within this parliament. Are we going to see abolition of leasehold? No, not yet. If new common hold schemes work, if there's an appetite for new schemes, and as people get more comfortable with the concept, and the documentation, then I can see more and more situations being introduced where existing leasehold schemes are converted to common hold. But there isn't going to be, 6th of June 2028, all leaseholds have to be converted into common hold. That's just not going to work and not going to happen. But we are going to see leaseholders wanting common hold if all goes well. We might see landlords who've just had enough of managing buildings saying, we're not making any money, we're worried about our duties and obligations, therefore can we convert into common hold? And we might see legislation saying, well, you can't collectively enfranchise. You've got to go straight from a leasehold scheme into a common hold scheme. Problems with conversion, who's going to consent to it? And what's the stance of the legal profession? Common hold last time around didn't work. Why? I think there was pushback from lawyers. There was certainly pushback from lenders, and developers just didn't like it. I think developers thought, to start with, this is great. People are going to want to buy freehold flats. But in fact, they weren't. They didn't understand the difference between freehold and leasehold, and therefore the ownership of a common hold flat, the freehold to a common hold flat, didn't particularly excite leaseholders or buyers, and therefore developers just sort of left common hold sort of to hanging in the breeze, as it were. Question had been asked: if we convert to common hold and there are cladding issues or Building Safety Act issues, do those issues melt away? And the answer to that question is no, they don't. A common hold association that owns a higher risk building or a relevant building will have exactly the same problems as a current landlord does. So don't think that common hold, conversion to common hold, eradicates or removes or mitigates the BSA issues that we're currently encountering. That is not the case. You needn't worry about that. A common hold has to be registered at the land registry. A common hold association is a company limited by a guarantee. It has a set constitution. The concept of a lease disappears. There is a common hold community statement, which is in essence the rule book for the running of the common hold, which again has to be in standard form. A common hold has to be registered at the land registry. To do that, the land which is converted into common hold has to be registered land and has to be registered with an absolute title. As far as consents are concerned for conversion into common hold, just about everyone has to consent to it. The new act does allow the majority of leaseholders, rather than unanimous leaseholders, consenting to the conversion. Again, as far as the conversion process is concerned, time does not permit me to go into detail. A question I'm often asked: if we do create common hold schemes, who's going to manage the scheme? And the Act and the bill enable unit holders to manage it themselves and also permit, excuse me, a professional management director to run the common hold. Problem with that is cost. The common hold insolvency issue has to an extent been resolved, but there is still a risk of common hold insolvency, which may be a problem. The bill, the current legislation, the intended legislation, is out for consultation. I had a meeting with the relevant government department last week about this, and we discussed common hold insolvency. We've got some ideas as to what we could do that could mean that the risk of common hold association insolvency and the risk of the common hold disappearing as a consequence can be mitigated against. But there is always this issue of a common hold association disappearing at Company's House and then the common hold title disappearing too. All I want to do now is just to open up the chat to questions. So does anyone have any questions? Is anyone doing a lot of buy-to-let work? Or student lets? We've got clients owning student let accommodation. The Renters' Rights Act, you've got to get all over. As far as common hold is concerned, yeah, you're doing that, Dominic. Just be careful. You need to be abreast of it and have a look at that timesheet on the slide that I gave you, which will help you to tell you what you've got to do and what your landlords have to do. As far as common hold is concerned, don't get too concerned about it. Common hold is just another form of freehold ownership, to be honest with you. And once we start looking at common hold in detail, all you've got are changes of documentation. And as far as procedure is concerned, not that much to worry about. I have been asked by the Law Society to write a book on common hold, and we'll be starting that later in the year. Sarah, notes will be sent out to you after the event. And if anyone else has any questions or queries, let me know. Do talk to Jess in connection with the services that Genesis can provide.
Yeah.
And I'm sure, Jess, you're available to talk to
Always, yeah.
people virtually or
Yeah,
face to face if time and circumstance allow.
yeah.
But Jess, I think we're just about out of time. Anyone has any questions or queries, feel free to drop me a note at the email address on the slide. And what's left for me to do is to, first of all, thank you, Jess, for inviting
Thank
me
you.
along. So
Thanks for being
everyone
here.
today, thank you very much for coming along. I know you're all really, really busy. And apologies once again for. I think the answer, Jess, is vodka or brandy, a combination of the two. But as I'm speaking in a conference this afternoon, if I were to do that, it would make the conference even more interesting on the basis I would be drunk. So I think we're better.
Yeah. Maybe not then.
Yeah, okay, if that's not. Okay, lovely. Yeah, Jess, you've got some polls that you want to ask?
Yeah, hopefully all
Yeah,
of them have popped up. It's the
yeah,
first time trying this, so
yeah.
hopefully they've all
I can see
popped
one
up.
on
It'd be
slide, certainly.
great to
Okay,
get
sounds good.
your
Yeah.
yes, lovely. Thank you very much. We will be sending out all the slides very shortly, but